Good morning, friends. Welcome to the 22nd episode of State of the Market Live. Today, we will analyze how the market is working in terms of Nifty futures and Bank Nifty futures. We'll also look at Reliance and a few other stocks. Yesterday, the market rose at the fag end of the day. If you see, entire day, Nifty traded in a small range initially. However, as the market moved towards the fag end of the day, it rose above the open. It rose around 791 and then showed some traction around 830 levels. So basically, this kind of shows some bullishness. If you see, for the past 5 days, we have been seeing signs of bullishness. However, today we have to see whether it is going to rise above the gap or not. We already tried once to break the gap. So on 13th of June, we formed a gap, and since then, that gap has been sustaining. This gap is very important. I have been mentioning every day that this gap needs to be taken out. So basically, if you see, this is the gap which has been controlling the market from the upside. So today, we have to face the gap again after we saw a kind of market intent to move towards breaking that gap. However, it was immediately shunted down during the day. And then again, we kind of moved below the gap. And again, today, we might test that gap and try to break it. Now, the point is whether we will do it or not successfully after market open. Only pre-open can tell us whether this will happen or this will not happen. So in Bank Nifty also, the same situation is there, and we'll discuss that in a bit. Before that, we'll see how ES is doing. So today, the ES is on a holiday. So mostly what we are seeing is only the Asian trade. However, we may not see any trading in the late hours. So yesterday, our players tried to kind of take that opportunity to take the market up. Now you see in Asia, S&P futures are kind of showing some upside momentum. And as I mentioned to you, 3822 is the line on sand for S&P futures. You see that we have been continuously hanging to that line, and it becomes a key level. If you see, we have been, for entire day also, we kind of moved around that level. And you see that this is the level where a lot of decisions get taken. Now, what is this line? What is this 3822? It is the point of control in terms of market profile on a particular time frame. But that is out of scope of this short webinar. So we will not discuss that. However, that line is going to be very important. That 3822 line is going to be a deciding factor for the market. So you see that the market tried to stay above it, but again, it was brought down to that level. Again, today we are trying to kind of go above that level. But I see no momentum in breaking above or sustaining above that level. Now that we have created a kind of kind of a distribution here. So even if the market goes, it may have to break this distribution before doing anything. So probably we have another 100-point range, which it has to do something. Otherwise, we'll come back to this level and then move in this distribution zone. There are no drivers. For the next 3 days, there are some US economic releases which may drive US futures, that is S&P futures. However, we'll not discuss this at length now. We'll shift to Nifty futures. So as long as S&P 500 futures are trading above 3822, I will be biased on the positive side. However, we have to ensure that we are respecting our gap rules. What do I mean by gap rules? So whenever there is a gap, we need to break that gap with huge volume. Number one. Number two, we need to ensure that we cover the entire gap. I will show this in Bank Nifty in a bit. Whenever we are not covering the gap in its entirety, we will not get the strength to continue above the gap. So number one rule is you have to get into the gap with huge volume, and then you have to cover the entire gap. Then only the gap can become strong. Basically, gaps are holes within a building. For example, if there is a wall in a building and there is a hole, so that is not strength. That is not indication of strength. So here, this gap is acting like a resistance. You see, at every level, it is acting like a resistance. Now, to break that resistance, to break that roof, the market needs some really good brute force. What I mean by brute force, you are forcing it through a bulldozer. For that bulldozer, you need volume, right? So that is the understanding behind gaps. Now, today, what are my options? So I have to open, the market has to open around 15,951, then go towards 16,200. No, that will be a confirmation of a range in the gap. That means over the next few days, we might trade in this gap. That is more important. So do not understand that. Do not think that, once we are opening in the gap, it is strength. It is not. You should open in the gap with volume, then cover the entire gap, trade there for a few days, and then that gap will become a place of strength. Otherwise, what happens is, what other options the market has is, it will open within the gap, trap all the people who want to be long, and then come back. That's what happened in ES futures, S&P futures over the past month. So here, what are the zones that I need to, and what are the levels that I need to take care today with this theory in mind? My zone 1 is going to be this one today, as I see SGX around 15 above 15,860 levels. So this is one minor resistance area that I am expecting to be broken today. So probably the market can open here or open here. So this becomes entirely zone 1, my zone 1. Within zone 1, it can go up to here and fall, or it can go and then break into zone 2 and then close here. So probably there is a chance of a trend day. So that is lower probability. Probably I would attach a probability of 40% to a trend day today. Very, very minor. 60% probability I assign to a move between 15,830 and 15,950, and then fill this range. Basically, we'll come back into this range. That's what I am expecting. However, I will be ready for any trended move as well. Whether you are an options seller or an options buyer, you need to be ready for this scenario with two probabilities. Within zone 1, we should look for a trend day as well as a range day. Why range day? Because the US markets are closed. So players may not be so enthusiastic to take the market on a trend on a day like this. But it doesn't mean that they won't. That's why I'm attaching lower probability of this happening and higher probability of this happening. However, when the market moves below this level, which is 767 levels or 750 levels, you can put an options range there. So if the market breaks this range, if the market comes below 15,754, or you can keep this range, basically 15,780, 750 range, then we can see a kind of, that means this is my option one, and then going to, this is option two, and then from here it can trade in a range, or we can come down towards yesterday's lows. So breaking of yesterday's lows will take this support also into consideration. But this is a very low probability. I will attach something like only a 20% probability of this kind of move, but I will be ready. Always remember, market is a collection of probabilities. You need to see which hypothesis plays out. And also in market, what happens is it will not come with predefined probabilities. You cannot say that, I am attaching 100% probability to this, or 100% probability to a range way, or 100% probability to a trend day, or 100% probability to a down day. This is how most of the retail traders go. But what I do is, what pros do is, they go into the market with an open mind. Of course, they have preset plan. Like today, I'm going with a plan of rangy day to an up day. Rangy day to an update. However, when the market opens, when new information comes, you have to alter your probabilities. You should not sit on the preset notion of what will happen and then trade. Then what happens is that bias will kill your ability to trade. That's why you should keep the bias out. And after pre-open, I will decide whether the market will be rangy or whether the market will go up. And also after the market opens, we have to see how the order flow is indicating strength, whether on upside or downside or through a range. This is for Nifty. So in Nifty, let's put a bottom line. We have a zone one with two probabilities. One is 60% is a trend move, 40% I am looking for a range move. Either thing can happen. And this is zone two, which has low probability. And below that, we don't have to look for zone 3 because we are not seeing any driver that is indicating a fall. However, you have to be ready, but the market can, be rangy like this and then suddenly fall. That also can happen. So you have to keep your options open in the market. Let's see what is happening in Bank Nifty. In Bank Nifty, what I see is there is slightly more strength than in Nifty as of yesterday's close. You see that yesterday, surprisingly, Bank Nifty broke and closed above the gap low. If this is the gap, we are trading above the gap low. If you divide this gap into two parts, so this is how the market traveled yesterday. Yesterday, you see that in case of Nifty, we did not break the gap. That is one reason why I am not so bullish in terms of Nifty. We'll look at SGX also and then decide. After that, we'll look at pre-open and then decide where it will open. Now, in Bank Nifty, the situation is different. It tried to get into the gap already. So this is an indication of strength. That means it is more daring than Nifty. That's why on 27th, you see that the market opened. However, it was drove back into below the gap zone. That is another point, but it opened. It tried to open. It tried to go towards this level, but it did not. So this is strength. This is not weakness. This is strength. That is why you see that strength has manipulated into yesterday's move. You see that yesterday Nifty was somewhere like this, right? Not like this exactly, did not come down. Let's erase this one. So Nifty was something like this. It tried to touch the gap and remain there. But in Bank Nifty, what happened? We tried to touch the low of the gap and touch the 50% zone. So yesterday, this is what has happened. Today, I expect Bank Nifty to open somewhere around here. If there is bullishness in pre-open, if Nifty pre-opens above 15,951, then Bank Nifty is going to trade like this initially. If Nifty opens between 15,830 and 860 and then goes to 951, Bank Nifty may trade like this. If Nifty opens below 15,830 and 860 and goes down, we may open like this and then fall down. So what are my zones? This is zone 1, very simple deduction today in Bank Nifty. This is zone 2, sorry, and then this is zone 3. So whether you are an option seller or an options buyer, what you have to do, you have to put these ranges in mind. If you are having call shots here, probably you may want to roll them up here. So generally what happens is the gap is not filled within a day. Generally, I'm not saying it won't. Generally, because there is no event or anything, and because US is on a holiday, I expect my base case for Bank Nifty is to move in this range or this range. So this is basically Z1 with kind of 40% probability and 60% probability. I'm 60%, I'm expecting Bank Nifty to trade in this range, and say 40% I'm expecting it to go into this range. When I say 40%, it can happen late in the day or it can happen in between the day or anyway. So however, my zone of play will be this one. So anything you have to do within this zone. However, if it breaks 33,886, then you have to be ready for this zone, and there is a very least chance. So probably this is my Z2 below this level, and below this, so this is the zone 3, which may happen, but it has very low probability, probably a 20% or even 10%, we can say 10% to 20%. So like this, when you attach probabilities, what happens is your ability to trade improves. You should not go to the market blindfolded, without any plan, without any kind of understanding of what the market can do. So when you're going to fight in the market, you have to first understand its potential, what it can do today, what kind of damage it can do to you today, and then you will get your returns as you expect. Let's see what is happening in Reliance. Yesterday we saw that Reliance Industries tried to kind of break the range. However, it could not. So you see that yesterday I told you that it has to break 2451 actually. So I told you it has to break 2451. However, it did not break that much because it did not have strength. So today again we may trade in the range, and on this day, on this particular day, I made a short video on Reliance, where I told you that this range is going to be there for the next few days. So as you see, we may kind of trade in this range for many number of days, because large players are kind of accumulating their stuff here. So as they are accumulating the stuff, it may take a lot of kind of momentum here. So then they will decide whether to take the stock back or up. So if at all Reliance goes above 2449 or 51 levels, we may see a kind of rangy move happening here, and we may form a distribution here. So there is a very good scope of around 100 to 150 points of trade, if at all you want to take a positional with a stop loss of just mere 20 points. So if at all a 15-minute bar or a 1-hour bar closes about 2451, you can take as per your risk or as per your position size, you can take with this minor amount of risk for a target of 2525 and then finally 2575. That's it for Reliance. So that's it today, guys. Let's before leaving, let's see what is happening with SGX, and then we will kind of decide what to do with the market at the pre-open. So SGX, let it come. Yes, it is. So you see that SGX has opened. However, it is not able to, if it is a bullish market, you see the kind of low liquidity. This is an indication of low liquidity. So basically you see that whenever there is indecision, this is what happens. So there is a up. However, I want this to break 15,951. This can happen in pre-open. So I will wait for the pre-open information, which will come in the next 1.5 hour. And then I will decide whether the market is going to beat with strength or whether the market is going to sustain in this range for today before taking or filling the gap or before coming down. So today our options are to open within this 830 860 range, but I see that consistently the market is above 860, so it may kind of that's why I'm attaching 60% probability between for a move between 860 and 950. If the pre-open indicates above 950, then I'm going to be total bullish. We have to look for 16200 levels over the next few days. We may spend on a range there, and then move towards 16200 for this week's expiry. That's all for today, guys. Hope this was a good webinar for you, and have a great day. Trade safe. Please subscribe to my channel, and also ask your friends to subscribe to this channel to encourage me. Have a great day, guys. Bye bye.